Everyone, and thank you for joining us today. We are really happy to have all of you here for this training sessions. Welcome to the free sharing of today. Here talking about fundamental of carbon accounting. This is Heng Heng talking to you. I am the moderator for today and also one of the ISO 14064 GHG reporting lead verifier of Eco Sustainability Group. Together with me, Speaker of the Day, Elisha Wong. She is not just one of the ISO 14064 lead verifier, she's also a co-author in SBTI standard contributions and also lead trainer in eco sustainability. A bit about us. We help companies to kickstart their transformation journey towards sustainability. We headquartered in Singapore with teams across Cambodia, Malaysia, Thailand, and the Philippines. You will meet them in the upcoming sessions of our bi-weekly free talks. Our main service is in sustainability reporting, using standards such as the ISSB, SASB, ISO 14064, ISO 14068 carbon neutrality, and ISO 14067 products carbon footprints. We have expertise for a total 16 standards, including assurance. Other than that, we do consulting, carbon credit, projects, training. We are proud that we have a policy arm called Climax Policy Lab, where we do our standards contribution works. What does standard contributions mean? They are global standard setter like ISSB, SASB, GHG Protocol, SBTI, VERA. Then they are standard users like preparers, auditors, regulator, data companies. But there's a unique bunch of people who are in between standard setters and standard user. They are called standard contributor, and that is us in eco sustainability. We provide technical commentary to the standard setter in order to continually develop the standard via exposure draft and technical consultant. So when you come to our trainings, you're not learning from people who are merely user the standard, but actively develop the standard as well. Before we start, just a few quick housekeeping notes here. So this session will be recorded for internal training and improvement purposes. So please keep your mic on mute to minimize background noise. So got a question? Drop it in the chat. Our team will respond or we will cover it during Q&A sessions. And remember, there's no such thing as a silly question. This is a safe space. We learn with one another. Over to you, Elisha.
Thank you, Heng Heng. Hi, everyone. So last 2 weeks, we had conducted a free session on Introduction to Sustainability Reporting. So if I've missed the session, don't worry. We have another free session coming up in January. So we will share the registration link towards the end. So today, I won't be sharing about sustainability reporting. So I will zoom in and talk only on greenhouse gas accounting. At some point, it might get slightly technical, but it's important for you to understand how it works and to make the decision that works for your company on the journey of a carbon footprint disclosure. So to get everybody on the same page, allow me to share with you the big picture on this first and get familiar with some keywords. So many actually heard of greenhouse effect or GHG, but actually don't really know what that is, and I was one of them. So if you are like me, not quite know what greenhouse effect is, type 111 in the chat box. So if you already know, please type 222 in the chat box so we get a concept of what is the group here today. Nice. So typing you, if you know what the greenhouse effect is, you type 111. If you do not know, you type 111. If you already know, you type 222 in the chat box. All right, allow me to continue. So actually, the greenhouse effect is the way in which heat trapped close to the Earth's surface by greenhouse gases. So these heat trapping gases can be thought as a blanket wrapped around the Earth and keeping the planet toastier or warmer than it would be without them. So space is actually negative 270 Celsius. So without the greenhouse effect, Earth temperature would be below freezing. So it is in part a natural process. However, Earth's greenhouse effect is getting stronger as we add more and more greenhouse gases to the atmosphere, and that is warming the climate of our planet. So what does carbon accounting, or what we call the greenhouse gas accounting, measures? So it tracks an organization's greenhouse gas emission so it can understand its climate impact, reduce emission effectively, and report transparently. So for the GHG that we are tracking, GHG means greenhouse gas. So it is a basket of 7 gases. So the main one would be carbon dioxide, which is CO2. So this is the everywhere gas, it's everywhere. So released when we burn coal, oil, gas, or even we drive a car. So it hangs around in the atmosphere for like hundreds of years. So today's CO2 will actually outlive all of us. So it's the biggest driver of the global warming. Next is the methane, which is the CH4. So it's a supercharged gas from cow, which is also known as the cow's fart, rubbish dump, rice field, and also leaking pipeline. So it hits the planet 28 times faster than the carbon dioxide over 100 years. So cutting methane actually gives the fastest climate win. Next would be the nitrous oxide, which is the N2O. It comes from fertilizers, soil, manure, and some industrial processes. So it has 265 times the warming power of carbon dioxide. So, and yes, it is also the laughing gas in the hospital. So a tiny amount of this can actually cause a huge impact on the earth. So next would be the fourth one will be the hydrofluorocarbons, which is HFCs. So it is a man-made cooling gases used in air conditioners, fridges, and also foam. So some HFCs traps thousands of times more heat than carbon dioxide. So a tiny leak actually causes a huge effect. So they are the hidden villains inside the cooling equipment. Next would be the PFCs, which is the perfluorocarbons. So it's the industrial gases released during aluminium smelting and also electronics manufacturing. So PFCs can stay in the air for thousands of years as well, longer than most civilizations in human history. So they are potent and extremely long-lived. Next would be the sulfur hexafluoride, which is SF6. So it's a fireproofing and insulating gas used in electrical switchgear. So it is one of the most powerful greenhouse gases ever discovered. Is 23,500 times stronger than carbon dioxide. So small leak, massive climate impact. Now, the last one will be the nitrogen trifluoride, which is a gas used in making semiconductors and flat panel screens. So it has a warming effect of 17,200 times stronger than carbon dioxide. And yes, your TV has a climate footprint before you even turn it on. So as an electronic manufacturer grows, so NF3 matters more and more right now. So, and all these 7 gases are being tested and measured for its potency over 100-year period, and we call it GWP, which is Global Warming Potential, based on IPCC AR6. So AR is Assessment Report. This is a big official science report by the IPCC, which is Intergovernmental Panel on Climate Change. So the current one would be the 6th assessment report, which is AR6. So it summarizes all the scientific knowledge about climate change, what's happening, why it's happening, what could happen next, and what we could do about it. So all 7 greenhouse gases are converted into carbon dioxide equivalent, which is what we call the CO2e, because each gas traps heat differently. And CO2e gives one common unit to compare and combine them fairly so that we can calculate the total emissions, track changes year to year, set targets, and also report climate impact in a single, clear, comparable way. And this is why every carbon reporting standard worldwide uses CO2e as the universal measurement. So another analogy would be like, so imagine you have Ringgit Malaysia 50, and another guy has Singapore dollar 30, and another guy has USD 100, and another guy has Renminbi 200. So it will be very confusing. But if everyone converts to USD, then we all understand the value. So CO2e is the USD for the 7 gases, and the E stands for equivalent, means it's not CO2 itself, it could be methane as well. But we convert them into CO2, we convert into CO2, which is the USD equivalent. All right, let's go. So this visuals a bit a lot of information. Please take your time to read. I will guide you step by step. So before this, allow me to share with you a term called above pre-industrial level. So this above pre-industrial level, it refers to how much warmer the Earth is today compared to the period before large-scale coal, oil, and gas burning began. So scientists use the year 1850 to year 1900 as the official pre-industrial baseline. So this period represents before the major factories, before the mass fossil fuel combustion, before the modern transportation, before the land use change accelerated. So it is the closest measurable reference point for the Earth's natural climate before the humans changed it. So then the Paris Agreement 2015 commits all countries to keep global warming well below 2 degrees Celsius and try to limit it to 1.5 degrees Celsius above pre-industrial levels. So today, we are already at 1.2, 1.3 of Celsius of warming. So this year, 2025, is now the hottest year ever recorded. And we have already temporarily crossed 1.5 degrees Celsius at certain moments. So a warning signal, not a permanent breach, all right? So why, just now I said 1.5. So why 1.5 is a safer limit? So scientific assessment shows by IPCC. So at 1.5 warming, extreme heat becomes more frequent but still survivable with adaptation. Coral reefs suffer heavy damage, 70 to 90% loss. So some crops decline, but global food system remain manageable. So flooding and storms will definitely intensify, but many regions still can adapt. So the world is tough, but it's livable. And why the 2 degrees Celsius is bare minimum survival. So going from 1.5 to 2 maybe sounds small, but scientifically is a climate cliff. So at 2 Celsius warming, 2 degree, so economic impacts, let's talk about economic impact first. So the GDP loss will increases 3 to 4 times compared to the 1.5 scenario. So heat waves reduce labor productivity, especially in Southeast Asia, and insurance markets break down in high-risk regions, for example, the flood zones, the wildfire zones. Food prices rise sharply due to crop failures in wheat, rice, and also maize. Biodiversity impacts, so bioloss. Coral reefs, 99% destroyed. Tropical forests and peatlands face irreversible die-off, and wildlife migration patterns collapse. Many species will lose its habitats ranges. Marine life suffers from oxygen loss and acidification. So let's talk about social impacts. So over 1.5 billion people will exposed to extreme heat waves every few years, and mass displacement from coastal cities due to sea level rise, and higher spread of vector-borne diseases like dengue, malaria. So this is not an economy that adapts easily. So if we overshoot 1.5 degree, so the conversation changes immediately. So if the world exceeds 1.5, even temporarily, so what we call overshoot, so the challenge shifts from reducing emission to surviving the impacts. And the real questions becomes who can adapt and who gets left behind. So wealthy countries can afford seawalls, air conditioning, food reserves. Developing nations face higher death rates, deeper economic damage, and weaker adaptation infrastructure. Vulnerable groups, coastal communities, farmers, lower income populations will face the worst impact. So this is why IPCC describes 1.5 as a moral threshold as much as the scientific one. Summary: 1.5, safer, healthier, and more stable future. And 2 is widespread economic damage, major bio loss, and social instability. So it's no longer a climate change, but a global crisis management. Great. So next, let's take a look at this chart. It's a very interesting chart. So it shows the warming indication with different effort from now till 2100, year 2100. So it's like slowing down before hitting the wall. So let's take a look at this global emission pathway, a quick explanation for all of you here. So let's take a look at the black color line, the black line, which is the historical trend. So global greenhouse gas emission rose steadily to 50 gigaton CO2e and have not yet entered a clear decline. Okay, now let's take a look at the pink color line, which is where there is no climate policy. So it will it will have a warming indication of 4.1 to 4.8. So assume no country ever implemented climate policies. So emission will keep rising sharply, extreme warming and catastrophic impacts. Now, let's take a look at the current policies that we have, which is the orange color. Orange color is a warming indicator from 2.5 to 2.9. So it reflects measures actually in place today. Emission plateaus slightly, then decline slowly. So the world currently is heading towards 2.7 degree. So still far above the Paris line levels. So assume, now let's take a look at the blue color one, which is the pledges and targets. So assumes all countries fully achieve their announced target, which is the net zero pledges, and also NDC. NDC, which is the nationally determined contributions, which are the climate actions plans that countries submit under the Paris Agreement to reduce emission and build resilience to climate change. So all the countries are required to submit new and more ambitious NDCs every 5 years. So with the next round, which is due in 2025, which is 2025 this year. So let's take a look at the pledges and targets, which is the blue color one. So would ban the emission downwards more strongly, warming at 2.1. So the gap is, so the ambition exists, but implementation is sufficient. And so now let's take a look at the pathways, which is the 2 degree and the 1.5 degree, which is the green color, or more accurately, is the teal color. So science-based pathway to meet the Paris Agreement. The peak emission, the highest has to be this year already, which is the peak emission is immediately. So from now on, you have to start reducing, which is 50% reduction by 2030 and net zero around 2050. And this require much faster action than the current agreement, than the current commitments, all right? So what need to be done right now in collective effort is to hold the increase in the global average temperature, which is 2% is the bare minimum survival, 1.5 is the healthier future, but much harder to achieve. So the world is running out of time, and do not let the planet hit more than 1.5 beyond the original baseline. So to stay below 1.5 degrees Celsius long term, global emission must peak by 2025 and for 43% by 2030 as a summary. So our team, this is our founder, Dr. Vincent Lim lah, and he was one of the speaker at this COP28 as well. So therefore, people come to us and ask us a lot of questions and push us to do more free training so that we can share what we know to people, because we are the standards contributor. We study a lot of standards. We help clients to help to them to submit and how to meet the global standards. All right, great. So now let's take a look what is carbon accounting. So carbon accounting is a way for a company to measure how much greenhouse gas it creates from its activities, from using electricity to buying goods to transporting products. So it turns all types of emissions into one common unit, which is just now I explained, which is CO2e. So company can see clearly its total impact on the climate. So by doing this, a company can understand where its emission come from, find ways to reduce them, and can track improvement over time and report the results clearly in its sustainability or climate report. So to keep it simple, carbon accounting is like financial accounting, except it's for carbon. Great. So next, we disclose GHG based on GHG Protocol. This is a standard, which is a detailed guidance on how organizations should calculate their emission across Scope 1, Scope 2, and Scope 3. Some might not even know. A lot of people do not know what is Scope 1, Scope 2, Scope 3. So let me explain to you later. So it standardized the definitions, boundaries, and methods so that companies everywhere measure the emission the same way, making the result very consistent, very comparable, and very credible. So the GHG protocol is the foundation used by SBTi, which is the Science-Based Target Initiatives, CDP, Carbon Disclosure Projects, many regulators, and most companies globally for carbon accounting. So you don't need to know you don't need to remember too much about all these acronyms. So anything, you just text us or find us, so we will answer you, right? So easy for you to remember. Just remember 3P, just what I want to explain to you: Scope 1, Scope 2, Scope 3. So Scope 1, 3B. So Scope 1 is the energy you burn yourself, which is the direct emission. Scope 2 is the energy that you buy from someone else, like the electricity company, which is your electricity use. So Scope 3 is everything that beyond Scope 1 and Scope 2. It's not you burn yourself, it's not by yourself. So everything in the supply chain, in your value chain activities, that falls under Scope 3. So now let's look. This one is the latest news came out from this GHG protocol. So just a recent news on the 9th September 2025. So the ISO and GHG protocol actually announced a strategic partnership to harmonize and co-develop their GHG standards. So the aim is to produce a common global language for emission accounting. So ISO and GHG protocol are two bigger standards. So they are very, very similar, like cousins. So to help streamline both standards, streamline, both standards are converging and mutual recognizing each other. So if you use ISO 14064, then GHG protocol will recognize it. This is what we call mutual recognition. So what stays the same for now, because it takes time to streamline everything. So what stays the same? So the existing ISO 14064 family and the GHG protocol standards will still remain valid. So while the harmonization process proceeds, so you are not required to stop using them immediately. And both organizations retain their governance structure, so the standard will go through the typical review, consultation, and the revision processes. So the key principles of good GHG accounting, like accuracy, completeness, consistency, transparency will still remain foundational. So I'll go a little bit faster. I have too much to share and time is just not enough. I'll go a bit faster. If you have any question, please type in the chat box, okay? All right, so let's take a look at the structure of ISO 14064, which I will only talk about part 1, which is very relatable to you, which is organization level of carbon accounting. So what it covers. So this part tells company how to measure and report all their greenhouse gas emission. Scope 1, Scope 2, Scope 3 at the organization level and we call this, the steps, we call this BSRQ, which is organizational boundary, emission source, quantification, and also reporting. So now let's take a look at the step one, which is you have to define your organizational boundary first. So organizational boundary simply means deciding which part of your company to include when calculating this carbon emission, your carbon emission. So it answers the question which entities, sites, offices, teams, or subsidiaries belong inside the carbon footprint and which do not. So you choose this boundary using a very clear rules, such as whether you own, you control, or you share control over an operation, so that the carbon accounting is consistent, fair, and reflects the real structure of the business. Okay, great. So then let's take a look at the first one, which is your reporting boundaries on this one. So when do you choose operational control? When do you choose financial control? And when do you choose equity share? So what does the difference? So mostly people will use operational control unless there is a specific request on that. So operational control, you choose this when you run the show. Use operational control if your company manages the day-to-day operation, even you don't own 100% of the business. So you choose this when you decide how the site is operated. You control the operational policies like safety, energy use, maintenance, procedure, all this. And you influence emissions directly through your daily decisions. So for example, a warehouse is 40% owned by you, but you operate it fully. Then you choose operational control. So most companies use this, especially the multinationals. So when do you choose financial control? You choose this when you control the money. So use financial control if your company makes the financial decision for the business. You choose this when you approve budget, when you control the financial risk and reward, when you make the investment decision, when you consolidate it in your financial accounts. Example, you own 51% of a joint venture and you control financial decision. So you choose financial control. So even if you don't run a daily operation. Okay, so this approach will align closely with accounting consolidation. So equity share is you choose this when ownership percentage matters. So use equity share if you want to report emission based on how much of the business you own, no matter who controls the operation. So you choose this when you have multiple joint ventures, you want your emission to match your ownership stake. The business structure is very complex, or you need a fair split for investor or partners. So example, you own a 25% of an overseas plant, so you report 25% of its emission. So even if you don't control anything. So this method is common for investors and conglomerates. All right, great. So this is one of the example we did for a company that has operation in different countries. So this company have just completed their CPT reporting submission together with us. So you can see we stated very clearly what is their organizational boundary, which is in which country, and also the reporting boundaries, we are using operational control method. All right, great. So after you have defined your organizational boundary, step 2 will be categorize your source of emission. Scope 1, scope 2 is very simple. Just now I already explained. Now come to scope 3. So scope 3 we talk about is the other indirect emission, which is beyond what you burn and what you buy. So, and it's defined by the 15 categories in GHG Protocol. So what does it mean? So it's shown on the screen. So we categorize it carefully. So these are the examples of difference of emission from all the documents and information you provide. Then we will identify the source, and from there we categorize them into different scope, because we do sustainability reporting for people, so we analyze for them. So it will covers your company structure, where you operate, your utility fuel use, what you buy, how you move your goods, your logistic, your travel and commuting, your waste and your water data, your supplier information, your digital and ID footprint, and outsource all the other outsourced activities. So for every emission source identified, you must also define all this, which is come to this quantification, which is our Q, quantification of your GHG emission. So you must also define what kind of data it uses, where the data come from, how reliable the data is, and whether it needs to be estimated or how often it will be collected. So this will ensure accuracy, consistency, and auditability under ISO 14064-1. Sounds like a lot of things to prepare, sounds like a lot of things to do, sounds like a lot of data is very difficult to gather. Do not worry, we are here with you. All right, so let's talk about the type of data used for carbon quantification. So when calculating emission, there are four main types of data are required, which is the toughest one to get, which is the most important one and the most accurate one, which is the activity-based data. So this is the physical quantity of the activity causing the emission. So for example, your waste, then we need the mass, the kg, how many kg of your waste. So the petrol that you have burned, that you have used, so we need the volume, which is how many liter, the kilowatt of the electricity, your energy use, your fuel properties like your calorific values, your fuel composition. We have to get this data, and this data we will get it from all the documents that you have given to us. We will process everything and see, and we'll tell you what is lacking, and also the distance, like the km traveled on all the commuting. So this method is the most accurate because it relies on actual physical quantities. Okay, so next come to spend-based data. Are you still with me? I see my frame froze. Heng Heng, you
Yes,
can still see me, right?
I can see you. I see your face frozen. You're right.
Frozen up, but as long as you can hear me, I'm in a
I can
hotel
hear
right
you.
now. I will do my best to share with you what I know. All right, so let's take a look at the spend base. So I will talk slightly slower. So spend-based data. So this uses money spent as a proxy when physical activity data is not available. So like for example, the amount of value spent on your courier service, amount spent on your IT services, amount spent on your cloud hosting, amount spent on your advertising or professional services. So this is useful for scope 3 categories where physical data is really so far the impossible to obtain. But can you? Yes, yes, yes. You find us and we will share with you how do we do that. So next is emission factor. What is emission factor? So emission factor converts activity data into emission, how much carbon you emit. So it is usually expressed at ton CO2e per unit of activity. Like for example, ton CO2e per kilowatt, ton CO2e per liter, ton CO2e per currency spent. So like for example, your country grid electricity emission factor, your diesel combustion factor, your air freight emission factor, your waste to landfill factor. So this emission factor must be from credible sources. Which are the credible sources? IPCC, government's databases, verified databases. So all these, we will advise on how do we do that, and we will tell you which one to choose from. So then next is global warming potential, which is called the GWP. So this GWP tells you how strong each greenhouse gas is compared to carbon dioxide. So this required because emission must be reported in CO2e. So GWP will ensure all gases can be combined into one total number. So now often the emission sources that we gotten, you can see already multiply emission with GWP. So it's easy for us to keep the calculation accurate and less calculation. So when selecting the emission factor, remember there must be number 1 from a trusted source, number 2 must be relevant to the real activity. You cannot simply just choose, hey, this one looks like is much lower than I choose this. No, cannot. It must be relevant to real activity. It must be updated for the year being measured. It must be capable of producing accurate and repeatable results, must be consistent with previous reporting methods. Last year you used this reporting method, this year you must also use the same so that it is comparable. So, and in these slides are some of the example of the emission factors databases. Okay, so next I'm going to share with you one chart that is very important, which is called the data tier. Data tier. So there are three main uses of data tier. So why do we use this data tier? So to measure how reliable your emission calculation is, this is how we evaluate and judge the information, the data that you give to us. So tier 1 is low accuracy. Tier 2 is medium, and tier 3 is high. So this helps you to know whether your number are rough estimates or close to the real value, so that you can improve, you can guide the improvement over time and to help to meet the reporting and verification requirement. So your your role is to, probably the first year when you disclose, you're at tier 1 because a lot of information not enough. But it's good already as long as you disclose. So you tier 1. So now you know that you're at tier 1, then you move to tier 2 the next year, and then move to tier 3 the following year. So tier 1, for scope 3, for example, okay? So for tier 1, is very rough estimates. It's all about global average, industry average, or is spend-based factor. So the database, the database do not reflect your country or your suppliers. So it's not accurate. It's all estimation, very high uncertainty. Okay, so like some examples would be like, for example, your purchase good will be the generic, like for example, if you have plastic, so you will get the average plastic factor, didn't zoom into specific plastic carbon emission factor. So tier 2, probably next year improvement will be your country specific, still not precise but better. You use your national emission factor, you use your national logistic averages, you use your national grid electricity factor. ASEAN or country level databases, good enough for tier 2. More accurate. But it is not your real supplier data, just a country average. Then following year, most accurate, which is your supplier level or activity base. So you use the supplier specific carbon data from the product itself. You do life cycle assessment, actual fuel data from the logistic partner, your actual energy data from the manufacturer, the product carbon footprint. We take the real measured values. Right, so it reflects the real suppliers. It has the lowest uncertainty and it is audit ready, and is very much required for high quality of reporting. If you have coming from a very established company and you need this to for your intended user. All right, great. So now let's take a look at the formula, the standard formula we use to calculate GHG, so you get the understanding how come and why do we need to get all this information and data from you. So given the following data, you calculate the GHG emission for each activity data point. So like for this example, so the formula would be GHG emission equals to activity data times emission factor plus times GWP. Very easy. So we do step by step. So this one is a sample. So if you have paper and pen, or you can understand the graph easily. So let's go through step by step. So from the invoices that we got, a total of 100 gallon of diesel fuel was used for generator during the whole reporting period. So emission factors are sourced from US EPA's emission factor hubs with the following emission factor for diesel fuel. So diesel fuel got carbon dioxide, methane, and also nitrous oxide. So these emission factors may come from many different units. So we have to convert them all in the same unit. So then we calculate already in same unit already. Then we will see whether it's already in GWP format, which is ton CO2e. So if it's already ton CO2e, which means it's already calculated in a universal measurement. So then the total you will have the total immediately. All right, great. So this format is essential in carbon accounting because it allows all greenhouse gases to be reported under one standardized unit, and therefore we can give you a total carbon emission value to all of you. All right, next. So quantification done. Now is the step 4, which is the reporting. Prepare your report. So the organization should prepare a greenhouse gas report, even if it is only for internal use. Why? Why? Because a proper GHG reports will will help organize all data clearly, make all the inventory easier to audit or review. It allows management to understand the result. It supports a decision on targets, your reduction plans, and also budgeting. And also prepare for future external reporting and prepare for internal and external verification later so that you won't get nervous or panic when people ask you for this information, because it takes months to do this calculation. It takes months to gather all the information. And so this report must be aligned with the purpose of the inventory. So when do you need to use this for internal use? Like for example, internal decision making for your setting reduction targets. You are report to a group headquarters. You are submitting your data to your sustainability committee, or you are participating in a voluntary program like CTP, the Carbon Disclosure Project. So okay, let me check. So if an organization want an independent verifier to check on your GHG inventory, or it wants to make a public claim that the inventory follows this ISO 14064-1, a formal GHG report is required. It is not optional, it is required. So the verifier, what do they need from you is, the verifier needs the report because it contains the boundary, the data source, the assumptions, the emission factors, the methodologies, the calculations, the uncertainties, and also the final emission totals. So all these verifier will need all this information. So without a proper one, the verifier couldn't do anything. So if an organization has completed this third-party verification, then they will issue you a verification. So the verification statement that the verifier sent to you, they will explain what was verified. They will give you a level of assurance, which is now that you are limited or reasonable. And standard use, what are standard use for the verification, and what are their verification opinions? And also, is there any limitation or finding? So in the report, you will see things like this. So then the organization must then make this verification statement available to the intended users like your management, regulator, customers, investor, and the public. So this ensures the transparency, and also you can build trust from that. So far, so good. I'm short of time. I am at a few more seconds. Okay, let me see what I can skip. No problem. We still got another free session next month. Yeah. Okay. So, okay, let's take a look to ensure the quality of information. Reports that you prepare should remember this one. Number one, you must provide comparative information, what it means. So you must show this year's carbon number side by side with the last year number or the most recent available, unless it is the company's first year reporting. Okay, next is you can correct the errors from previous years. So if you find mistakes in last year's carbon accounting, because this is new, everybody still learn how to do this, so probably there is errors. So you can take this year to correct the mistakes for last year. For example, like wrong emission factor or incorrect activity data, or you are missing the supply data. And next, you can minimize the duplication. So you avoid repeating the same numbers, charts, or explanation throughout the report, and also cross-referencing to other reports. Like for example, you may point to another report like your annual report or your sustainability report or your CDP disclosure instead of just repeating the data. So another one is the quality of the information disclosed. Like for example, whether you disclose the information you disclose is material or not. So you only disclose information that meaningfully affect stakeholders' understanding of your climate impacts or risks. Let me repeat. You only disclose information that meaningfully affect the stakeholders' understanding of your climate impacts or risk. So the information disclosed have to be connected. What does it mean? So your carbon disclosure should not appear as isolated number, and they must link to your strategy, your business model, your risk, your governance, your financial impacts, and your targets and transitions. Wow, like very difficult. Do not worry. We will teach you step by steps if you sign up our courses. So we have one day, 2 day, 3 day, 4 day, 5 days. You just send in your request. We will do that. But because 1 hour, we couldn't tell you much, right? So then this ensure the carbon report is not just a GHG table, but a very coherent narrative. And information disclosed, you can also choose to be aggregated or disaggregated. So what does it mean? So do it as appropriately as possible. You must decide when to show the totals, when to break the numbers apart. So what do I mean? So when do we combine the number is suitable? So when is suitable when you combine? So when the totals actually communicate the message clearly, the category are small, not material individually, or the combining does not hide any key risk. Then you combine the numbers, no issue. But it's very important, then you have to break it into details and you have to make a category that is material. And stakeholders need a deeper transparency. And when this decision rely on granular data or this emission differs significantly among regions or operations, then you have to break down into details when disclosing your carbon emission. Okay, almost. Hanging, sorry, give me a bit more time. One last slide. Okay, so then why is this important? And this GHG emission that I have just shared with you is compulsory under ISSB S2, which is climate related disclosure. S1 is about general disclosure. So this one is climate related disclosure and it's compulsory for you to do that. So the objective of climate related financial disclosure on risk management is to enable user of a general purpose financial reports to understand an entity's performance in relation to its climate-related risk and opportunity, including your progress towards any climate-related targets it has set and any target it is required to meet by law or regulation. Okay, done. Over to you, Heng Heng. Thank you very much, everybody. So now is, because we don't do this only bi-weekly, over to you, Heng Heng, to guide them over the Q&A session.
Thank you. Thank you, Alicia. Thank you so much. Now it is the time to open the floor. If you have any question or maybe one key takeaway you'd like to share before the wrap up. Is there a question in the chat? Is Keegan want to take that question or?
Yes. Karen has a question. For more experienced organizations in GHG reporting, how many years of reports would they have by now in average? I'd say it really depends. In Southeast Asia, Singapore has had voluntary voluntary disclosure since around 2018. So I guess for large companies in Singapore, you're looking around 2018, 19. That's when they start to report. In EU, slightly earlier. For countries like Malaysia, Thailand, Indonesia, the a lot of these countries, they have mandatory reporting this year. And for countries like the Philippines next year, I'd say we're kind of almost the same in terms of for Southeast Asia. Okay, I only
Great.
see one question. Yeah.
Is there any more other questions? If not, then we would like to share with you. So what's next? Yeah, Heng Heng?
I would like to share the WhatsApp QR code.
Oh, okay.
Yeah, right, Jai? Okay. Please this is the WhatsApp scan. I would say that this is the WhatsApp scan. Please WhatsApp scan this QR code to join our WhatsApp community. Yeah. So if you would like to receive any latest updates on sustainability matter in South Asia, so please remember to check all the messages in this community. Sometimes we will throw out some surprises for everybody in the community. So in the way that you're connecting and engaging with us, and we will update through this community WhatsApp group. Yeah. And next. Okay. Now, as we prepared all this useful content for free, we have even more to share with you in our upcoming full day paid training in January, which is next month. What we are offering are content we have spent thousands of hours to prepare and refine for all of you who trust us. Now, in the training, you will get to experience and learn practical application simulation, not only theory. At the same time, also you will learn real case scenario. So in this training, we will also share industrial real case scenario insight. And also before the training, we will send out a questionnaire for participants to collect some critical concern in your company or in the industry so that we can discuss. And also we will talk about reality challenges in Southeast Asia. Then we will comment common in misunderstanding, risk and opportunity, community group latest update as well. All right. Then also we do have a full suite of sustainability training valued at Singapore dollars 50,000. And this is exclusive available to our registered member. Now, what is this 50,000 entail? Now, this is the whole entire A to Z training module. That's included sustainability reporting, GHG, on the detail of what Alicia mentioned just now, and also including coaching, mentorship, assurance, etc., and etc., and etc. Now, if you are interested to building a dedicated sustainability team for your country or your company, please approach us. Send us an email. We can tailor the full package for you, right? Now, for a powerful introduction, join our one-day intensive program on January 31st, next month, where we will share carefully selected content from this premium package, and the standard rate is just 250 Sing dollar per person. Not yet finished. Do you ask me, do you have the early bird rate? Yes, of course. That you will register by 17, right? That you do have early bird charges, which is only at Singapore dollars 200 per person, right? Now, not only that. So today, we do have a special live event flash offer. All right, just to thank you for being part of this free talks today, we have an exclusive buy one free deal for just Sing dollar 250. Buy one free one. So how do you do it? Four step. First, scan the QR code to register. Second, we will send you the payment details. Third, complete your payment within 24 hours to lock in this offer. Remember to pay that to lock in the offer, right? Fourth step, you will get to bring a friend together with you for free, completely free, right? Now, this flash deal is for today only, right? And it is limited only for the first 8 person, right? So get ready, your handphone to scan, right? So the countdown start now. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, the time's up. So thank you. Thank you to everyone who registered today. Now, before that, I still have more. Hold on. Okay. Beside this, hold on. Okay. We still have more upcoming free talk for everyone of you and also your friends. Now, we have just completed, which is the second one. You see Miss Alicia Wong's face, right? That is what we are today, right? It just completed. But please mark down your calendar on the 9th of December, right? 9th of December, we'll have another talk on the mandatory sustainability reporting in the Philippines. What it means for you, 101, all right? Mark your calendar for that. Okay, the next, there is another one dated on the 15th of December next month as well, which is entitled ESG Regulatory Landscape in Southeast Asia. And also on the 12th January, which is next month. Right, mark your calendar on this. And the title will be Sustainability as a Driver of Business Advantage. Right? And followed by the 26th of January next month, which is next year also. All right. Did I? Right. And after that, not finished yet. 31st January will be the one that I just shared with you. That's a paid training. And followed by on the 9th of February, there's an introduction to carbon accounting. And on the 23rd of February, there is a ESG regulatory landscape in Southeast Asia again. So you can screenshot or easy, join our WhatsApp community group. Then we will send out all this information. Right. I think that's all. Thank you.
Oh, thank you very
Yeah.
much for joining us today. So we will see you in the next session. So before you go, also remember to follow us on our LinkedIn or WhatsApp group for any updates, events, or news. And for Sustainability Crew, please stay back for a short meet. Thank you very much. Thank you, everybody.
Thank you, everyone.
Those who are not on
Bye-bye.
sustainability, you can log off already. We will see you in the next session. Hey, sign up, sign up. Let me go back to the slides. Scan. All right. And this one will be the WhatsApp community.
Right.